Welcome back, everybody, to Volatility Trading Strategies. So if you're at all interested in volatility trading, I'm sure you've probably seen by now, there's some really crazy price action going on in one of the most popular volatility ETPs out there, the VXX. Now, the unfortunate truth is a lot of people do actually trade these products without fully understanding what they are. And lately, if you've been on Twitter or social media, you've probably seen a lot of buzzwords being thrown around, like indicative values, like authorized participants, share creation, redemptions, a lot of very confusing things if you're just trying to trade the VXX on a surface level. Now, it's been a busy week for us. We've actually done 2 full live streams on this now, so about 3 hours of content. But given how important this subject is, I thought it would be a good idea if I try to condense all of that down into a shorter video that people can just absorb the information that they need so they're not walking into a train wreck trying to trade something that they don't understand what's going on. And I do like to hear from people as well, so make sure you leave a comment down below telling me what you think about all this mess. But let's get into the madness. Let's get to the actual announcement. We'll just explain what it is. If you haven't seen this, we'll go over it real quick. So Barclays, the bank essentially that manages the iPath ETNs here that we're talking about, says here, Barclays Bank PLC announced today that it has suspended until further notice any further sales from inventory and any further issuances of each of the iPath pure beta crude oil ETNs, which we're not going to talk about, but pretty much everything I say today can apply equally to that as well. And then the iPath Series B short-term VIX futures ETN, the one we're all interested in, the VXX. In each case effective as of the open of trading on Monday, so this has already happened, March 14th, this suspension may cause fluctuations in the trading value of such ETNs. Yeah, no kidding. Daily redemptions at the option of holders of the ETNs will not be affected by this suspension. Okay. Announcements like this are intentionally vague, so if you're a little lost, don't worry. I don't think this was meant to clear anything up. They could have done a far better job, but they say here this suspension is being imposed by Barclays because Barclays does not currently have sufficient issuance capacity to support further sales from inventory and any further issuances of the ETNs. So quite vague there, and again, intentionally so. They don't actually share a whole lot of information, even on the best of times when everything's functioning normally. They don't tend to reveal too much about their behind-the-scenes hedging and whatnot, so super vague, but they are clear to say these actions are not the result of the crisis in Ukraine or any issue with the market dynamics in the underlying index components. Now, the underlying index components we'll get into in a minute. They're basically talking about the VIX futures. This has nothing to do with the volatility markets being broken in any way. They are functioning normally. This is not the crisis in the Ukraine. This is just something internal with Barclays. Barclays expects to reopen sales and issuances of the ETNs as soon as it can accommodate additional capacity for future issuances. I've been thinking about it a little bit, and again, I'm not on the compliance side, but my best guess is 2 things. One, could have just been a legitimate error. It could have been something really stupid, like maybe they just, didn't issue enough shares, or they didn't file something correctly, or they didn't, something bounced back and they were in a little bit of a panic behind the scenes and they had to shut it down quickly. And if that's the case, it'll probably start fairly soon. They'll probably work that out in a day or 2. That's not my best guess, though. What I actually think would happen is, we'll get into in a minute ETNs versus ETFs, but ETNs have to do a lot of extra hedging behind the scenes. And I suspect that's what it is. I suspect they had an issue lining up all their hedges at the correct premiums. Of course, everything's price sensitive, so hedges are available. It's just whether they were going to be taking on hedges that guarantee losses at the fund. They probably don't want to do that. So I suspect that's what it is. But if your comments are something to do with why they did this, let's leave the why. It's happening. Let's leave the why out. Let's just try to figure out the what. First of all, this is the boring part. Don't fall asleep. This will be quick. But we have to actually talk about what VXX is. So like I said, VXX is an ETN, not an ETF. Basic difference here is that an ETF, exchange-traded fund, like the VIXY, It's a fund, and essentially that means that the assets are being held by the fund. So in this case, the VIXY is actually holding the VIX futures, and that makes it on the asset side. An ETN, an exchange-traded note, is essentially a liability. It's a debt obligation. You can view it as sort of an IOU by the bank to make sure that they square up with you at the designated price, and they're doing a bunch of management and hedging behind the scenes to make sure that all happens. But it's important to know that there is some stuff going on back there because they're not actually holding the underlying futures. It is a debt obligation. Now, 99.9% of the time, this is not going to matter. I know a lot of people think, oh, that's shady, don't ever trade ETNs. I don't know. I mean, you could look at it that way if you wanted, but honestly, 99.9% of the time, the VXX tracks the VIXY virtually perfectly. They're structurally identical and everything is fine. There are two things with ETNs, of course, that people have to be aware of. The first is, like I said, there is a little bit of action behind the scenes with regards to hedging and whatnot. And the other thing, of course, is the credit risk of the issuing bank. I'm guessing. I'd be shocked if that's what's going on here, but stranger things have happened. You just have to know that if you're trading an ETN because it's a debt obligation, you are actually subject to the solvency of the bank that is issuing the ETN. So keep that in mind. If, for example, you were holding the VXX and for some reason the bank went, bankrupt, you'd have a little bit of a problem on your hands. Mainly what I want to drive home here is how this actually functions and why halting shares is such a big deal. So the VXX derives its price entirely, I should have bolded that, entirely off the VIX futures expiration cycles. Not the VIX. You see that a lot. People are saying, well, it's not tracking the VIX. The VIX was up 3%. The VXX was down 2%. What's going on? It's not designed to track the VIX. It has nothing to do with the S&P 500. The VXX tracks the VIX futures, more specifically the front 2-month VIX futures. So this website is VIXCentral.com. If you don't have it bookmarked, make sure you get it. This is every vol trader's website. Probably check it every day. So essentially what's happening, there are a few products still that trade the M4 to M7, the middle of the curve here. A couple of long ones, VIXM, VXZ. But mainly all the name volatility ETPs, VXX, UVXY, SVXY, they're all trading the front 2-month futures. And this is quite simple. If you want a sort of a 20, I don't know how long this is, give me a second. If you go to the actual YouTube channel and go to this search function, you can type in VIX futures, and there should be this one here. This one's fine too. It's just older. I kind of remade it a year ago. But watch this one, VIX futures expiration. It's going to give you exactly presentation on what's going on with those VIX futures. But essentially, the really quick version is conveniently today is the first day of the new cycle. VXX is holding 100% of that front month M1 contract and 0% of the M2 contract. So every day that goes by, you can see there's 34 days in this cycle. Every day that goes by, they're going to sell a little bit of the front month and they're going to buy a little bit of the back month. And this is going to happen in equal increments right up until that expiration. And on expiration day, the VXX will be holding 100% of the back month future, which is M2 for that day, and 0% of the front month M1. M1 goes off the board, it expires, M2 becomes M1, and the whole cycle starts again. So it's very important for people to understand that just this is where VXX is getting its pricing. It is not based on supply and demand. Now, I say in quotation marks here, normally supply and demand is irrelevant. VX30 goes up or down, it changes the NAV. These are just bullet points for me, so I don't forget anything. It's more for me than it is for you guys. But point is, you can actually track exactly what this should be doing based only on these futures. So again, if we open the VXX, we get rid of that, and we look here, this is March 7th. March 8th it went down, March 9th it went down, March 10th it went down. If you want to know why, you don't have to look to the VIX Index. That's not it. You don't have to look at the S&P and what happened there. That's not it. You don't have to look at the volume of the VXX being traded. That has nothing to do with it. All it is, very simply, is the movement of these VIX futures. I'll show you what I mean by that. So this is March 7th. These are the futures. On this VIX Central website, you just click multiple dates, go March 8th. Remember, it went down 3 days in a row. So there we go. VIX futures dropped. That means the VXX dropped. Has to. Go to the March 9th. No matter what the VIX does or the S&P does or 500,000 people buy this thing, it doesn't matter. It went down, so the VXX went down. If you go to the 10th, this goes down again, so the VXX went down 3 days in a row. That has to happen. But then it reversed and went up 2 days. We're going to ignore the last day because that's just share issuance voodoo. But if you want to see why it went up the last 2 days, it's the same reason. It is pricing exactly off these VIX futures. This is what's happening. And I'm kind of harping on this point because it's important. You can see how it went up the last 2 days. That's why the VXX moved. It's because it's tracking an index. There's an actual methodology underneath the VXX. It's this index, the SPVIX STR index. You can bookmark this if you want. Hopefully on the live stream you can see that web address, but if you can't, just type in SPVIX STR, you're going to get it. But essentially this is the short-term VIX futures index, exactly like I said, pricing the next two near-term futures, replicating a position that rolls the nearest month future to the next month on a daily basis in equal fractional amounts. This results in a constant 1 month rolling long position in first and second month contracts. Very wordy for basically what I said. The VXX is tracking whatever's going on here. Basically the midpoint taking into account the days to expiration. That is what is happening. So why is that important? Well, because if it tracks an index, and it has an actual value that it is supposed to be, a lot of people are going to look at that and say, okay, great, I understand there's a methodology there, but still, if a bunch of people go in and buy and sell this product, surely that's going to affect its price, right? And it would if it was Apple stock. A whole bunch of people buy or sell Apple stock, that is obviously going to affect the price. That is directly how it is priced. But not VXX. And this is where people often get thrown off. They don't quite understand this last step because it's happening behind the scenes and nobody really talks about it, nobody really knows about it. But essentially what is happening is because the VXX is supposed to track an underlying indicative value, an intraday indicative value. So you might see it IIV, you might see it just IV. In fact, you can just check it for yourself at any time. You can just go on to even Yahoo Finance, right? If you ever want to see, first type in VXX, right? This is the price of VXX at 34.56. If you just go in and do VXX-IV, this is the indicative value, 26.34. So there's a massive difference there between what the VXX is trading and what the indicative value is trading. If you look at it in a trading software, this is Thinkorswim for anybody wondering, VXX minus VXX.IV. In TOS, it's a dot. On Yahoo Finance, it's a dash. But if you see what's happening, this is totally normal. The NAV of the VXX under normal functioning, literally going back as far as you can go, is just baseline zero. It's tracking the indicative value, not perfectly. It is a freely traded ETN, right? There is an open market here, and these are people buying and selling it. But there's a mechanism involved to get this thing to flatline like that, and that's where the authorized participants come in. Authorized participants being people who are essentially helping the VXX and all the volatility ETNs, and to be honest, all the ETFs and ETNs out there. The SPY has an indicative value. They all do. What the authorized participants are doing is anytime there's a gap between the indicative value and the NAV value, because of the buying and selling of the product, it might happen quickly, they're actually really strongly financially incentivized to go in and close that gap. And what happens is Barclays, the issuing bank, can issue shares, they can create or redeem shares, and that is marked to the indicative value. So if there's a gap between the indicative value and the NAV value, because Barclays can match those prices, the authorized participants actually have an arbitrage opportunity there. They can come in and collect their money. And this isn't one of those things where it's a regulatory thing and there's a bunch of people managing it and maybe they'll get around to it or maybe they'll forget about it and it'll kind of go haywire for a couple days. They really do get paid quite well for this. So that's why it has flatlined so consistently. This is a very smooth functioning product. That's why I said at the outset of this live stream, I know it sounds nefarious and it sounds like these are banks manipulating, and believe me, I am no fan of Wall Street. I get it. I it drives me crazy when all the things behind the scenes are happening that are taking advantage of people. But this isn't really one of them. And to be honest, this has been happening for so long, so normally on all of these ETNs and ETFs. And it's just something that very few people know is happening, but it is happening underneath. So what happens when Barclays comes in and does this? They have suspended until further notice, further issuance of new shares. Well, now we have a real problem, don't we? Because if Barclays suspends share creation, the authorized participants can't do their job because there's nothing to match anymore. Barclays isn't creating shares and marking the value to the indicative. Well, now the whole thing breaks down. Essentially, the VXX, without this mechanism in place, now it's going to revert back to what all those people out there mistakenly think it should be, a supply and demand-based product. Vast majority of the time, 99.9% of the time, it is not based on supply and demand. It is marked to a specific methodology, and it functions very well. But with Barclays messing around with the share creation, for whatever reason, again, like I said, I took a stab at it, I guessed, but who knows how close I am. Could be way off, I don't know. Whatever reason they did this whole thing has broken down. And now the VXX is essentially trading like a normal stock based on supply and demand that you can't short. So what's going to happen in that situation? Well, it's probably, very likely, going to deviate substantially from its NAV value because there's nothing keeping it back now. Every time it bounces out of place, it gets dragged back. Well, not anymore. So this is what's happening. TVIX. Everybody's, well, my nemesis. If you go on my YouTube channel, how many videos have I done warning people to be careful with TVIX? But it happened. 2012, like I referenced before, they had internal controls where the fund, because the volatility space was super new back then, it was actually growing quite quickly. Assets under management were hitting red flags for them, so they halted the share creation. Seems like a legitimate reason to me, but more interestingly is what happened. So the NAV decoupled, like we're seeing today with the VXX, but it actually lasted a month. The share creation was halted for almost a month, and the NAV of the TVIX went, at its peak, about 90% above the indicative value. So remember I showed you how to calculate that. This is the VXX minus the VXX.IV. Remember that. You can track this now and post it on Twitter and look cool in front of your friends. But this chart, you can imagine, I mean, at the peak, that's actually pretty significant, 14.9. We're talking about something that is trading at, before this, what, 25? What was it at? Yeah, like mid to high 20s. A 14-point above move, that's very significant. So TVIX, you can imagine, even went further than that. Now, this has happened very quickly. It actually happened faster now, way, way faster this time around than it did with TVIX. But another interesting thing about this story of TVIX is what happened when they resolved it. And this is one of the things that I want to warn people about when we get into how you should trade this, or if you should trade this. When they finally resumed the shares, whether you think that all of this is manipulation and voodoo and it's magic behind the scenes and these are just bankers scamming us, whatever you think, take my word for it, that NAV will very quickly go back to the indicative value. It's not going to matter if the Wall Street Bets people come on and they start dumping in volume here. It's not going to matter how many of their friends get this thing going. This is not AMC. With AMC, you can actually, with enough volume, not that you're in total control, but you're in control, you have a little bit of momentum, and you can push things around. This is not that. This is a situation where as soon as they resume share creation, remember, those authorized participants get paid very well to do their job, and they're going to come in and fix this, and it's not going to take very long. So if it gets really, really high, like it did with TVIX, or who knows if the army of Wall Street Bets gets on this thing, who knows how high it'll go. But the rug pull is coming. The only reason it wouldn't be coming is if there was serious structural problems at the bank, and for some reason they're not going to reissue these shares. They're going to scuttle the VXX, which I find unlikely because of how successful it is. So just know that that day is coming. You can't mark it on a calendar because we don't know what day it is, but 2 days from now, if this is just a minor issue, 3 weeks from now, if they have to find enough hedging and adequate premiums to get this thing functioning again. A month from now, I don't know when, but that day is coming. So just be aware of that. It happened with TVIX. The price went basically, I think, this is 10 years ago, memory serves. It was something 1450-ish. That was the NAV. The indicative value was all the way down at 750. So this thing made it, almost 90% above that. And then rug pull. It went very, very quickly down. And they don't care. They're not going to warn you ahead of time. They're not going to help you out and give you a little wink nod and tell you, we've got this thing almost solved. You better start resolving this. No, it's just going to be a day. So this is where I should mention, remember I said I'm going to get back to this regulatory nonsense, this legal talk that they're going. Read you one thing. Here we go. Issuer redemption. Listen carefully, because a lot of people talk about lawsuits and, hey, they can't do this and that. They can't? Barclays Bank PLC will have the right to redeem or call the ETNs in whole but not in part at its sole discretion and without your consent on any trading day on or after the inception date until and including maturity. Trust me, they're not worrying about us and our money. They can either just rug pull like they did with TVIX back in the past, and something like $300 million of capital is just poof. If you were long, sorry, it goes right back to the indicative value. They can just accelerate the product if they want to. They don't have to tell us ahead of time. They don't have to do any of that. So just be aware. The wide range of outcomes on this thing should give anybody pause. What to do if you're already holding VXX? This is essentially directed at the, 10,000 people who emailed me today asking me what they should do with their positions. So this is always tough for me. I apologize. I'm not registered to address anybody's personal investing situation. So I don't punt on the questions, but I do have to let you know that I, first of all, can't answer your specific questions legally. But secondly, even if I could, I'd still have to know the full structure of your portfolio. I'd have to know your risk tolerance. I'd have to know what your goal and your hypothesis for the trade was, how it's going and where that's comparing, and your follow-up plan in case it goes bad, and your plan B and plan C. I don't know any of that. So unfortunately, if you're holding it and you're worried, or if you're short it and you're losing, I can't be the guy who tells you, here's what you do, you go sell that, or here's what you do, you buy the VXX, you short the UVXY, and you're going to make a lot of money. I can't do that. But what I can say is, if you're short, it's going to hurt, or it has hurt. And I'm sorry about that, because it's obviously nothing to do with you. You shorted something that this doesn't happen. I mean, it's never happened with VXX. This doesn't happen very often. So it's not your fault you lost money. But obviously, if you're short, it's going to hurt. If you're long, the temptation would be to think that, congratulations, high five, slam dunk, right? Got lucky. Just remember, it's not quite that cut and dry, because again, the gap down risk with this product, unless you've actually cashed in your VXX, if you're still holding it, you might be sitting on some nice gains, but you have to remember that that gap down risk is one announcement away. This isn't an issue with, okay, I'm going to hang on to it and see if everybody can keep pushing this higher. Again, as soon as those share creations are redeemed, and again, it could be a month, it could be a week, it could be before I get through this live stream. Could be anything. There is that risk there. And then the acceleration clause that I also told you about, that's there. And what's important to tell you here, just a heads up, because I don't want people to be screaming, hey, should we band together and sue these guys? If they accelerate the product, which, like I said, very unlikely, it's VXX is awesome. No reason I can think of that they wouldn't want to continue with this and fix the problem soon. But let's say they did. You have to be aware that you might think, okay, great, they just bought me out, I don't care. No. When they mark that down, it's going to mark to the indicative value. So if you're holding a product in the VXX, let's say it goes to 100, it goes to a crazy price, and the indicative value is 25. You might think, okay, they're going to buy me out at 100. They're not. They're actually going to mark that down to the indicative value at 25, and you're going to just have all your profit taken from you. And imagine how bad that would hurt. That's why people talk about suing. That's why people talk about lawsuits. But again, they do not have to tell anybody that this is going to happen. They can just announce that it already has happened. They're saying, oh, you noticed your money's gone? Here's why. That's the announcement. So just be aware of that even if you're on the long side, you're not free and clear on this. You still have some decisions to make. I can't tell you to buy and take profit. I can't tell you to get out of your shorts and take the loss. I can't do any of that, but I can make you aware of the risks. Third question I think people will want is, are VXX options affected? The short answer is yes. Yes, the options are going to trade based on the VXX because that's what they're tracking. So if you want to see an example of the options working here, this is Thinkorswim. I'm sure your software, whatever it is, has some type of time machine or think back here and toss. If we go to VXX and we go back to Monday or last Friday, March 11th, and we just do a little mock-up trade here, you can see what's going to happen. We just buy an at-the-money call, just for an example. Trading $26.50, $1.36. So let's say this person wants to do $1,000 and trading at 136. Don't fat finger that. 7 contracts. So this person with their little 7 contracts, thinking they're trading $1,000, this trade is up $4,399, basically in 2 days. Yes, the VXX options are affected. If you want to compare that to the VIXY, which of course is supposed to be structurally identical in 99.9% of the time, this person does an at-the-money call. Same thing. They're paying $1.20 for this one. So they might be able to squeeze out an extra share. Let's see in a second. 8.33, always round down because you can't buy partial option contracts. And this person's going to buy 8. Well, this person who used the VIXY, they're up $20. This person's up 4,452. This person's up $20. So yes, bottom line, obviously the VXX options are going to be affected by this. Another thing that I will say is, sometimes in these situations, people feel like they've suddenly learned something. And if I've taught you anything today, awesome. That's what I'm doing this for. But sometimes people feel like, okay, now I know something that other people don't know. Now I'm going to go into the options market and I'm actually going to make a bunch of money here. I know this thing's going up and I'm going to go buy those things. The problem is, and it's just a good baseline assumption, you should always assume the options market is both efficient and knowledgeable. We're not talking about unsophisticated traders here. First of all, options traders in general are probably more sophisticated. Just, I don't know if that's a blanket statement. Sorry if you're a stock trader, but there's a little bit more sophistication there. Then you drop down to volatility specific option trading and there's even more sophistication there. And then you drop into the option strings within the VXX, not dummies, right? You're competing against people who are pretty smart. They probably know everything that I went over today. So don't think that you have some huge edge because you've learned something today. If you want to take a trade, great, but everything in the options market, remember, it's not about direction. It's about underpaying if you're long vol and selling things that are overvalued if you're short vol. It's not about jumping in and taking leveraged directional positions. Right now, volatility is extremely elevated in the VXX options market. So if you're going to be jumping in and buying vol because you think, your VXX calls are going to go up, they might, but they'll only make a profit if it goes up above and beyond the already high volatility that you're paying. Those contracts are insanely expensive right now. Remember, we did our live stream, wasn't actually that long ago, where I did a live stream on fading the VIX, how to fade VIX spikes, episode 29. I went over the 3 best ways to fade the VIX and the 3 worst ways to fade the VIX. And among the 3 worst ways to fade the VIX when it spikes to 30 is to buy put options, right? It goes to 30. Of course, everybody knows it's going to go down. Let's buy put options and get rich. Well, you're paying an insane amount for those premiums up front, and you're not going to get rich. When the VIX goes down, you're going to actually struggle just to outpace and stay positive, to be honest. Sometimes the VIX will crash down 10 points, and you'll actually lose money on those VIX puts. This is going to be the same situation. I want everybody to assume that you might be really smart, but just assume that everybody else is also pretty smart as well. Make sure if you are trading it, you have a real edge, not just I think it's going to go up because Wall Street Bets is coming in. Remember, it has to go up by an amount that outpaces the crazy high vol that you paid for those contracts. So if I could recommend anything, going back to that Fade the VIX live stream, if you're going to be doing options, why not do spreads that involve both a long and a short leg? At least you can take one of the variables off the table. So stick to verticals, butterflies, iron condors. Calendars are a little bit riskier, diagonals a little riskier, but they're fine too. Stick to those because they have longs and shorts, and you're kind of eliminating something off the board. Remember, options is just about basically eliminating variables and trying to control your own controllables. We can't control everything, but we can eliminate a few of those things that can surprise us.